This is Stuart Crichton, the man who co-founded online travel agency Cleartrip.com in 2006. 7 years later, Cleartrip.com competes in a fiercely competitive OTA market contested by many players. As of 2013, Crichton claims that Cleartrip is doing over 5 lakh transactions a month in India at an average transaction size of 5,500 to 6,000 rupees. This means that the company is clocking gross revenues of up to 300 crore rupees per month. Cleartrip.com has been one of the many successful OTA companies in India able to attract investors the likes of KPCB, DFJ, Sherpalo, M&M and Concur Technologies. Even with such a large base, the company grew at 35% in 2012 and is now aiming to break even by FY14. In an exclusive chat with Tech Circle, Stuart Crichton, co-founder and CEO of Cleartrip.com, talks about the company's marketing plans, new products and fundraising.
Now, OTA is a very mature market in India with 4 large firms dominating it, that is Cleartrip, Yatra, MMT and Via. We've already seen international firms like Travelocity shut shop in India. So going forward, where do you see the market standing? Is it time for consolidation in the Indian market, or will you see these small and medium-sized players shutting shop?
I don't think the market's mature at all. I think you've got a lot of activity going on in actually a relatively nascent market. I think you've got a relatively growing and maturing sort of domestic air market, but I think with regards to the other offerings that are available to consumers, I think it's still relatively small. So with that in mind, I think there's tremendous opportunity both from a growth perspective and a consumer perspective. With regards to consolidation, it's really hard to determine what you would be consolidating. I think behavior out there amongst consumers is such that they probably look at multiple sites. So you're not necessarily acquiring a bigger user base of customers. Content is not ours. I mean, we're intermediaries, so effectively really our job is to provide the best kind of product to the consumer as well as developing the best relationships with suppliers. So, you know, it's really only as good as that. And so there's not a natural acquisition in that sense that will result in disproportionate margin, for example. So I think that there will always be, you know, young emerging companies that are looking at the opportunity, looking at specific segments of the market. But for us, we're very focused on the things that we've been very active on in the market. We're very focused on building out our accommodation story and really focusing on the things that are driving consumer behavior in the future of travel, which is, you know, the sort of mobile and tablet initiatives. So that's kind of how we look at the market.
Okay, fair enough. Now, talking about these new age OTAs, they've actually been innovating a lot. So what is your take on those? And also, can we going forward see a Cleartrip acquisition in India?
A new age OTA, so I'm a bit confused by what that is, because hopefully we're fairly new age as well, because we're not that old, right? So can you be more specific?
Okay, I was talking about the likes of GoIbigo.
Oh, I see, okay, within the Indian market.
Correct.
Well, as in, do we consider them an acquisition opportunity?
Yeah. And what is your take on them?
I think that they create competition. You know, it's not just GoIbigo. I think there are a number of others that provide a choice for consumers, and I think choice is good. I think fundamentally pricing is very commoditized in the market, and I think being able to offer competitive pricing is a prerequisite of even entering the marketplace. I think your offering has got to extend well beyond just pricing and the transaction. You've got to really think about the pre-trip planning process, the post-transaction experience of the consumer, and I think that's where our investment in technology and our investment in product, I think, is really an advantage to companies like Cleartrip. So discounting is effective to a point, but it's not really a sustainable business strategy. So at this point, I think we're very focused on organic growth in the market and building out our own business portfolio.
Are you looking at acquisitions in India?
I think we're looking at the right acquisitions in India, and those don't always mean chasing revenue. I think for us, we're very focused on the user experience, the quality of the product, the technology innovation that drives those products. So anything that can help us accelerate our roadmap and accelerate and therefore complement our business activities, I think they're very attractive to us from an acquisition opportunity. I think the obvious choices of going out there and acquiring somebody that's doing rather something similar to us for the sake of buying revenue is something that we're perhaps not in the market for at this point.
Okay, but so are you in acquisition talks as of now?
I probably am not making myself very clear, am I? No, we have no conversations going on.
Now, so how does your operations spread look like? You have a very strong presence in India as well as the Middle East. So So now, what is your plan there? Do you actually plan to take on Travelocity and Expedia in the markets that they are present in and are dominating? Or is it like you're kind of focusing on the Asia Pacific markets where they don't have a very good presence, like somewhat like Make My Trip is doing as of now?
Well, you're right. I mean, right now we're very focused on the India market, and that's extended into, I think, 6 markets now in the Middle East, including UAE and Saudi, for example. I think with those 2 sort of geographies, I mean, you're addressing 1/3 of the world's population. So within that, there's an awful lot to do. And I think we've got to be very conscious that we don't spread ourselves around the globe too thinly, and therefore are not able to execute and deliver on the proposition that we currently do in India and the Middle East markets. Obviously, we've been in India longer. Middle East is still a relatively nascent market for us in that sense. So we're very focused on really continuing to build out our proposition in both of those markets right now. We have no immediate plans to go into other markets. There are opportunities, and they are certainly very interesting, but I think we've got to do that on the back of providing a great service to our customers in the markets that we operate on. And as I said, there's a lot of innovation that still needs to be done there.
Okay, fair enough. But are you the market leader in any of these markets?
Well, I mean, the reality is, if you look by product or if you look by the relative positioning. So our positioning, for example, in the Middle East is to become the local player in the Middle East. Now, there is certainly competition that drives significant inbound volume into those markets, and far greater than the number of transactions that we're doing at this point. I think from a local play in the online space, we're certainly emerging as the market leader in most of the markets that we operate there. But as I said, it's still relatively small, and I think the next 3 years is certainly very exciting from a growth perspective. In India, no, we're certainly not the market leader, but I think we're a clear number 2, and we're focused on really leadership in the core areas that matter for us, and we can perhaps talk about those a little bit later.
Okay, so when you say that you're number 2 in India, can you tell me how much market share do you have in the Indian market?
Yeah, I mean, I think it's a tricky one, that, because I mean, we don't necessarily obsess about market share. So I mean, it's all very well having significant market share in the airspace, but off a very low margin and a very unpredictable volume. And so that's not necessarily a sustainable strategy. I mean, we have a very healthy market share in the airspace, I think of around 27 to 30%. But
this is only India?
In the domestic market, yeah. And that's been growing pretty well despite the challenging year that we've had. But as I said, our focus is really on maintaining that, continuing to make sure that we offer the consumers the right product and the right strategies for our supplier partners. But I think really where our focus is as an organisation is really building out the extensive relationships we have with the sort of hotel and alternative accommodation space in the Indian marketplace, and of course in the Middle East. I mean, it's a similar strategy there as well.
Okay, fair enough. Now, can you sorry, I'm taking that again. Can you talk about your offices a little? How many offices do you have? What is the team size as of now? Can you talk about Cleartrip as a company?
Sure. So we have 3 offices in India. So they're based in Gurgaon, obviously here in Mumbai, and the bulk of our engineering team, which is our engineering product team, probably represents about 1/3 of our overall workforce, sits in Bangalore. We have an office in Dubai, which is sort of headquarters our Middle East business as well. From a total team strength, we're sitting at about 430 to 440 total employees right now, including our Middle East team. And that's something that we've always tried to keep quite lean. And the reason for that is that we believe the right way to build this business is through scalable technology. And therefore, we spend a lot of time trying to obsess about how do we solve consumer problems, how do we scale the business using technology rather than necessarily using extensive sort of manpower in that case.
Okay, fair enough, sir. Now, how much revenue percent does India contribute to your overall revenues? Now, since you're already present in the Middle East, so talking about the Cleartrip revenues in total, how much of that percent is India alone?
Oh, it's still significant. I mean, I would say probably in the region of about 85 to 87% of our revenues come from India. We're relatively new to the Middle East market, and whilst the growth rates are in excess of 200% there, the relative, absolute revenue is considerably.
So how do you see this percentage changing going forward, probably 5 years down the line?
Yeah, I mean, I think realistically, you look at where India is, the opportunity that exists, the infrastructure that's been put into the market. I think India will remain for the next 10 years the single biggest contribution from a market perspective. I think probably over the next 3 years you'll probably look at a 70-30 split with India revenue and our other markets in the Middle East. But realistically, I don't think it'll change much beyond that.
Now, so our data suggests that Cleartrip has net revenues of around 100 to 120 crores. Have you broken even? And if not so, then when do you aim to actually break even? Also, What is the revenue target for this year?
Okay. So clearly there's a lot of information in there that I'm unlikely to divulge sort of voluntarily at this point. I mean, I think your data sources are probably a little bit outdated right now, but let me try and address it in the best way that I can. So we actually broke even in 2008. So that was considerable time ago was when we found our first full year of operating profit. That hasn't sustained itself, and we've been investing heavily in the business over the last couple of years specifically. Right now we are scheduled, I think, probably to break even by about the end of the first quarter, beginning of the second quarter of the next financial year. So obviously that's not too far away as a business. And I think that's really being driven off the back of some of the operating decisions that we've made around how we build our business. I talked a lot about our investment in technology versus manpower. And I think we've been able, despite the relatively negative growth that you've seen in the market, or the aggressive negative growth that you've seen in the market over the last 12 months, we've still been able to grow our business at about 35%. So, these things combined have led to still fairly healthy performance in a pretty tough market.
Okay. Now, talking about the data, we also know that you made some profit in the FY10, but then you again slipped back into losses in FY11. Can you explain why did this happen?
Yeah, I think it was really just a more detailed investment in our technology. I think we go through cycles of investment. Obviously, all of that can't be capitalized. And when you start to see new areas of opportunity emerging, and obviously back in 2010, even at that point, we were looking very aggressively at the mobile and tablet space. So you're bringing in a lot of new competency, new skill sets into your business, redefining what your brand means to consumers, and sometimes you're investing ahead of the market. It certainly doesn't help when the market itself sort of stalls and doesn't grow. I think that puts further pressure. But in general, you've got to have a sort of a 24-month view and horizon in your R&D. Otherwise, you're always playing catch-up, and that's philosophically how we look at our business.
Okay, fair enough. Now, can you tell us about the number of transactions you're doing on a monthly basis? Also, how is it spread across air tickets, hotels, packages, and the other offerings that you provide?
Yeah. So I think we probably do in a region of about 500,000 transactions a month.
Okay. This is overall or just in India?
No, I'd say that's an India assumption right now. So about 500,000 transactions a month. And that's split primarily between our three big products, which is our domestic air, our international outbound air, and of course our hotel product. Packages for us is a relatively new product. We're very excited about it. We rolled it in. This is our dynamic.
Can you give a percentage demarcation?
Yeah, so I would say that probably about 25 to 30% is split between our international air and our hotel product, and the balance is our domestic air product. So 70% of what we sell today is still domestic air. Okay. And that's going to be in the foreseeable next sort of 24 months. I mean, that'll change, but not dramatically. I just think that's just relative to where the market is and what's going on. Yeah, I think that's probably answered the question.
Okay. Also, what is the average size of these transactions?
The average size of these transactions is probably, well, right now, it's probably in the range of about 4,700 to about 5,200.
That is because the bulk is still domestic travel.
Yeah, but also if you look at, the bulk is certainly domestic travel, but I think if you look at what we sell, we sell a lot of air tickets, obviously. You look at the split of the air tickets in the market, it's dominated by low-cost carriers. So pricing is quite aggressive, although over the last 12 months, pricing has been probably abnormally high than we've been used to in the past. Whilst we sell a great deal of 5-star and 4-star properties, I would say probably 60% of what we sell from an accommodation perspective is in the 3-star range. 3-star and low 4-star range, and so that doesn't have a very different pricing structure than the sort of top end of the air product. So it's averaging out on the numbers that I talked about.
So what is your registered user base in India, and how is it growing year on year? Also, how much traction are you seeing on the Indian side?
Okay, I don't know if I've got exact numbers for you at this point. I mean, we're doing about 4 million uniques a month, probably. And that user base has probably been growing. Registered user base has probably been going about 30% per annum. So I'll have to come back and just give you specific numbers. I didn't quite follow the last part of your question. That was with regard to...
That was the unique sector.
Yeah, okay. So, our business is primarily an Indian business, right? Serving Indian customers. So that's really where the focus has been.
Okay, fair enough. Now, you raised funds from VC investors and then there was a large round from Concur. Did any of the VC investors exit in the process?
No. We still have our Series A, B, C investors, and obviously Concur was our D round. But all our early investors are still participating with us.
Okay. Now, talking about all the investments, you've actually raised over 60 million, or close to $60 million. And some of these investments are already more than 7 years old. So I'm just wondering, so what is the game plan? Is there an IPO in the pipeline? What is the exit plan for these investors, and how do you plan to give them back?
Yeah. So have you been talking to our investors? is that where you're coming up with the question for? No, listen, it's a fair question. I think that early investors have an expectation around the timeline around their investments. Right now it's probably a little bit harder. There are not many companies that have successfully gone out and given an exit in the India space. Obviously, one of those is a competitor of ours. But I think the current world dynamics, and certainly the India dynamics, probably don't support an IPO option in the immediate future. And frankly, I don't think that's something that we've been thinking a great deal about. I think there's still a lot of value to build in our business. I still think we're relatively young, as I said, from an internet market perspective in India. And I think that we've got to get to a situation where there's a lot less volatility in the market, and we have to get much better around predictability around what our numbers are looking like before we even consider going out into the public market. Now, that said, I think that is not the only way of giving liquidity to early stage investors. I think there are many ways to do that. And when that presents itself, we'll certainly consider it as an option.
Can you elaborate a little on that?
Well, I think there are private equity companies out there. There are other investors that are keen to come in at a later stage and pick up secondary in businesses. Okay. Very often that can be a good transaction for both parties. So I think there are a number of other ways that we can address it. But I think it's really a combination of early investors wanting to exit, number one. The appetite they have around the relative return that they're looking for, and of course finding the right partners that can continue the same perspective that the management team and the remaining investors have in the business, which is the future growth and value creation of the business.
Now, like you said that there's no plans for an IPO in the immediate future. So considering that, is it safe to say that you'll go for another round before the IPO? And if yes, then how big a round are you looking at?
So I think when we think about our business, I don't think any of us are sitting there thinking of an exit, right? I think we're very focused on the operation, building the right kind of business in India. And as I said, I think there's huge amounts of opportunity to fulfill that potential. So we're still at a very early stage in that context. Now, where we are today is that we're well capitalized to execute our current business plan. Now, there are definitely going to be areas of opportunity that present themselves that probably require us to go and get access to more capital. We've got a good set of investors, and hopefully, with a little bit more optimism in the market, that capital will come at a fair price. And when that presents itself, we'll certainly consider it. But we're not sitting there going, look, within 2 years we have to hit an IPO. That's not it. I think the more important thing is to think about the type of business you're building, the structure, the kind of value that you're adding to consumers. And then an IPO may be an option for us to consider in the future, along with other options. So that's really how our thought process is.
Now, you've raised over $60 million. I wanted to know, since you're saying that you already have capital, so I want to know that first of all, how long is it going to sustain you? And secondly, where have the investments been?
Well, as I said, I think that we have capital to execute our current business plan. If we see the growth returning in the next 3 to 4 quarters, I think that's going to extend our position certainly up to 24 months. So, from that perspective, I think we're in a relatively strong position. Answering your first question around the 60 million, that's tapping my brain a bit, but predominantly we've invested very heavily in technology and innovation, in the user experience. I think those are some of the things that Cleartrip is really known for. More recently, we've invested very heavily in our hotel business. We now have contracts and direct relationships with in excess of 9,500 hotels in the domestic market space. So that's required a lot of accelerated investment. And really, marketing continues to be a big part of what we're doing. I think typically Cleartrip has always marketed itself primarily in the online space, in the social space. We went out and reintroduced the brand in the offline space through a TV commercial, which we launched in November of last year, that had a very good response. So we're encouraged by that, and that's something that we're going to continue to do over the next sort of 3 to 4 quarters as well, is really promote our branding in a much more offline fashion. And I think that's relative to where the consumer interacts with the brands. I think whilst emerging online businesses are growing, I think fundamentally, I think the Indian consumer still consumes branding offline, and so we need to be much more relevant there, I think.
Okay, you also invested in the expansion into the Middle East.
Yeah, as I said, I think the Middle East investment has been a cautious investment. What we tried to do there is take the sort of 6 to 7 years of learning and building Cleartrip in India and say, how can we do that more intelligently now in the Middle East, right? And perhaps avoid some of the early mistakes we made in building out this business. Also, we've got the benefit of a very agile and flexible platform through our technology. All of our technology is in-house. It's completely architected from scratch and built by us. So that gives us a lot of freedom in terms of how we enter new markets, through what platforms, through what devices, for example. And so that's allowed us to accelerate our entry into the 6 markets that we operate in the Middle East, and they're showing early signs of growth, so we're excited by that.
Okay, fair enough. Now, talking about marketing, like you yourself mentioned that last November you started with TV commercials.
Yeah.
So why did it take you so long? Is it because that you got nervous of all these other players, Yatra and iGo and the others marketing so aggressively on television? Is it that you followed suit? How did that happen?
Wow, okay. Isn't it funny how people interpret these things, right? No, I think just our DNA is primarily online, and our DNA is primarily in the social environment, and so we were very focused on building our brand and our relationships with our customers through that. I think the other factor is that we have a slightly longer term view on these things, and we would rather focus on the product experience, making sure that we continue to get out of the customer's way, get them to enjoy the experience as they move through the purchase path, focus on the metrics in our business and strong conversions, rather than just going out there and trying to get as many eyeballs as possible, because I think that's a very inefficient way to do that. I think we're at a stage now where the level of understanding of our business, the level of utility of our business is very, very strong, that supports much more aggressive offline spending. We can maintain the kind of metrics and conversion that we have in our business and accelerate our acquisition of new customers, then I think that just makes a much healthier business. So we're not remotely intimidated by competition advertising on TV, because we think we have a very different proposition to offer customers.
Should your competitors be nervous? Also, do you have a message for them?
You know what, I think we have a fairly good relationship with all of our competitors, and in the sense that they're all helping build a market, right? They're all providing a product for consumers. I think if it was just a one player out there doing one thing, then that's not a very exciting environment to be in. So, they help us keep on our toes, they help us think about innovation, and hopefully we do that to them as well. But I think collectively we want a bigger, more addressable, interesting market, and for that you need competition. So we're all for it.
Okay, but you mentioned that your market share is around 27 to 30% in India and you're number 2. When can we see you becoming number 1?
Well, I think the number 1 player is a big player out there, and I think if our only objective was to grow market share to the number 1 position, I'm not sure that we'd be using our investments in the right way. I think it's about getting the right sustainable relationship with customers over a long period of time. And that's really how we look at it. So you can aspire to be number 1 in the conventional travel sense today, but that will look very different, I think, 5 years from now, in terms of how consumers are buying, how they're interacting with you, and the types of technologies that enable them to do that. So everything goes through change, and I think it's really where you want to be. Are you looking at the future of travel, or are you trying to address the travel of yesterday, really? So we're very much focused on the future of travel.
Okay. Thank you so much for your time, sir.
You're very welcome. Thank you for your time. Okay.